10 luxury investments that will skyrocket your wealth. Setting short, mid, and long-term financial goals is a crucial step in taking control of the future of your finances. Welcome to our channel. Before starting our discussion, there is a small reminder. If this is the information you are really interested in, don't forget to subscribe for notifications in any newly uploaded video, and stay till the end of the video so that you don't miss any important information. Now, let's continue. You become wealthy by selling items for a profit, and you remain wealthy by preserving items that increase in value over time. Wealthy people enjoy utilizing time for financial gain. First up, we have luxury cars and watches. The most unique and gorgeous luxury items can sell for hundreds of thousands of dollars individually. These investments should only be made by wealthy people due to the price tag alone. However, they might not be suitable for smaller investors either, because these kinds of assets are difficult to appraise and have liquid markets, making it potentially difficult for them to sell at a targeted price. Rich investors can afford to wait for the price they'd like on these kinds of things, but smaller investors may desire a more constant, quicker return on their investment. Next, we have wine and whiskey. A whiskey from 2023 isn't worth anything, but one from 20 years ago is valuable for thousands of dollars. Many of these distilleries or other third-party vendors will hang on to it for you and even organize the sale when the time is perfect. Wealthy people buy it at the whiskey by the barrels. You don't even have to take ownership of the barrels. Whiskey that has been aged produces annual returns of 10 to 15%, and wine too. Next, we have purchasing debt owed by others. Well, this is a fun one. Did you know that you could actually buy and own debt, not just your own, but also that of several other people? Individual loans, accumulated medical debt, mortgages, and even payments for bills are traded on a secondary market. When a debtor doesn't pay it off right away, the company that is owed the money has two options. Either they try to collect the amount due themselves, or they sell it to someone else who will take care of it. The company that is owed the money typically gathers all of the owing money into a single set and sells it to another individual for 15 to 30% of the loan's worth. The organization then makes efforts to recover and retain the difference as profit. Even websites that specialize in purchasing and selling debt existed. Next, we have pieces of fine art. Fine art is among the most well-known but enigmatic investments for the super rich. Million-dollar works of art are surreptitiously showing up in mansions and yachts through enigmatic dealers. It's a market dominated by people who prosper financially during difficult times. Although some crowdfunding sites now permit smaller investors to purchase a portion of beautiful art, you'll need really large funds if you want to get your very own Monet or Picasso. Not only does fine art cost a lot of money to purchase, but it also doesn't produce dividends. It can't be traded as stocks can. Due to this, fine art is very illiquid and difficult to value. Selecting works of art that the public would value the most also requires expert judgment. Individual works of high art are a result of all these characteristics, typically superior investments for the wealthy. Next, we have private banking. Do you know how saving money in the bank makes most people lose money? They charge you for depositing, withdrawing, and even just retaining the money in the account. Yeah, that is the truth. The amount of money you will receive for keeping your money in the bank is 0.01% of the interest rate, implying that the biggest banks in the US would offer you a $1 interest rate if you deposited $10,000 into a savings account for a full year. But the most unbelievable fact is that banks treat wealthy clients quite differently. This practice is known as private banking. Ever wonder what kind of return wealthy people receive when they leave their money in a bank? Well, most private banks return on cash deposited an average between 7 and 13% annually. The same bank gives rich people $10,000 for every $100,000 deposited, while paying poor people $10 for each and every $100,000 placed. Now we move on to hedge funds and private equity. Hedge funds and private equity are two investment categories that are often only accessible to either so-called accredited investors or private buyers. According to SEC rules, accredited investors are individuals with $1 million in net assets and at least $200,000 in income over the previous 2 years. Those with investment totaling at least $5 million are considered qualified buyers. Remember the private banking example of how banks take advantage of impoverished and offer amazing returns to their top-tier clients? Hedge funds are institutions created to maximize profits for investors. The idea is to continually outperform the market, but regularity is the key. When a fund has a successful year, you might see returns of 30 to 40% for that particular year. But perhaps the following year, they'll only achieve 5% or perhaps lose money. Hedge funds resemble mutual funds in certain ways, but they use more risky and sophisticated investment techniques like leverage, options, as well as derivatives. Because of these factors, securities regulators regard smaller investors as unsuitable for these types of transactions and forbid them from taking part. And lastly, we have collectibles. Collectibles provide an alternative viewpoint on the world of investing. To the right buyer, rare baseball cards and many other collectibles are worth a fortune. If you approach this choice the right way, your childhood pastime or a strong eye for a fantastic deal in the present market can win you enormous riches. Investing is all about diversification. Start increasing your wealth now by choosing from this selection of commodities. Guys, that brings us to the end of this interesting video. Thanks for being at the end of the video, and don't forget to like, share, subscribe, and tell us what you think about this video below in the comment section. Thanks for watching, and we'll see you in the next video.